platforms. Those on LinkedIn, this will not be saved for you all, but everybody else will be able to see this afterwards. All right. So let's talk about the interest rate hikes. Okay. We're going to talk about exactly what it was, what it means, why they did it, and how it affects your money. Okay. We're gonna definitely be able to touch on all of those. Before we get started, those that do not know me, I am Janae Adams. I am a speaker, personal finance speaker, financial literacy, whatever you want to call it, financial wellness speaker, and the author of 2 books. I personally paid off $50,000 of debt in 2 years. And so I share my story around the world and help people be financially better in their lives. Okay. So that is me. And just a reminder, those that have not heard, at the end of the month, June 28th through the 30th, I am doing a 3-day student loan forgiveness masterclass. Okay. Each day is for a different group of people. The first group is for the public sector. So if you're a teacher, a nurse, social worker, you work for the government, work, in the military, work for nonprofits, that first day is for you. Okay. That is who I'm focused on, is those in the public sector. I'm going to show you how you qualify for student loan forgiveness, but we're going to go deeper than that. Okay. The economy is heading in a certain way, not in a good way. And so I wanted to, talk about what you need to be doing to prepare for that as well. The second night is for those of you who went to for-profit colleges that shut down, total and permanent disabled individuals, as well as those in income-driven or income-based repayment programs. Student loan forgiveness is available to you. Student loan forgiveness is possibly coming for the income-based repayment. So we're going to cover all of that. And then the last night is for everybody else. So we're going to talk about where the $10,000 student loan forgiveness stands currently, what could possibly happen, and what you need to be doing right now until that possibly happens, and what you need to be doing now to prepare for repayment. So it's definitely going to be more than just student loan forgiveness. Okay. Those who know me know I always go deeper than what the topic is. I go into strategy. I go into showing you what you need to be doing with your money, what steps you need to be taking so that you are not caught off guard by what happens in the economy, whether it's local or global. All right. So those of you who are on Facebook, YouTube, LinkedIn, Twitter, the link is in the post. Those of you who are on Instagram, the link is in the bio. All right. It's June 28th through 30th. You can come on the day that fits you. All right. So let's get started about the interest rate hikes. What it was, why they did it, and how does it affect your money? Okay. Those are just joining me. I am on multiple platforms, so you'll see me going back and forth. All right. So yesterday, Federal Chair Jerome Powell moved it up 75 basis points. Okay. Now, before last Friday, it was probably going to be 50 basis points. But last Friday, report came out that inflation was 8.6%, and they're trying to get it down to 2%. 8.6 is very far from 2%. That first came out. And while that came out, what was interesting in that report, an 8.6% inflation, this is what got them a little skittish, is that it wasn't just food and gas. We talk about all the time, the news talk about food so much, gas so much. They had seen the inflation pretty much ingrained all through the economy. Okay. That's what got them a little bit worried and knew that they had to go bigger. So you've seen it. Okay. Food, gas, you start seeing it in energy prices. You started seeing it in flights. You started seeing it back in used cars again. Like they were starting to see it like this. Instead of just like one or two things, they were seeing it across the board. And so that, and then of course, things with the stock market started happening. All of that, when yesterday came, people were saying it was like the percentages kept going up, that they were going to probably go to 75 basis points and maybe even $1. I mean, 1 point basis point and 1 percentage basis point. And so they went 75, which the stock markets were pleased with. Of course, they were pleased with that. But a lot of people reached out to me yesterday and was saying, why are they doing this? This is going to hurt the economy and everything. And it's not about it hurting the economy, but they need to cool the economy down. Those of you who've been following me for a while, though I have been saying this for months, that the economy needs to calm down. It needs to cool down. It is too hot. Okay. It's too hot and it needs to cool down. And that's what they're trying to do. So before they started raising the rates, it was at zero. They put it at zero because of the pandemic. All right. They were trying to get people to borrow money. So to buy cars, to buy homes, for businesses to borrow money and build in there. They were trying to get money flowing, right? Where it flowed too fast and too fast. And so the economy got too hot. So now they're at a point where they need people to stop spending money. Okay. Because in addition to all of that was going on, you also had people with stimulus checks spending money at all of these everywhere. Amazon, Target, Walmart. And that was causing supply to be lower and demand to be higher. Inflation goes up. All of this that they just didn't measure correctly, and inflation went up because of it. Now they're trying to get it go down. And in order to make it go down, you got to get people to stop spending money. So because they're putting the interest rates up, that means it's going to be more expensive to buy a house. The mortgages are going to be more expensive. So we've already seen mortgage applications, refinance applications, new build starts of homes. All of that has started to go down. What also has gone down is lumber prices. Like things that have to do with houses are going down. Okay, they're going down, and they needed to go back down to normal. Jerome Powell said, and this is what they're trying to do. Okay, so this is for those of you who want to buy a home. Jerome Powell is basically trying to get the interest rates up, flood all these people out of the market, the investment firms, the hedge funds, people who want to flip. They're trying to get them out of there, because, and people who just buying houses sight unseen, people from foreign country, all that. They're trying to get them out of there by making the mortgages too expensive, making it unattractive, so that it's going to get up. The interest rates are going to get up with the mortgages, and then hopefully they can go back down to normal. And then also goes down to normal is the prices. So it's already been news headlines that in different markets, the prices are going down. These sellers are coming back down to earth and cutting their prices because their houses are starting to sit. All right. So we're not going to get into the mortgage thing, but that's just a backdrop of what these interest rates going up does. It slows things down. So this is what it affects when it comes to your money. All right. But before we get to that, that's what they're doing. They're trying to cool down all these markets. They're even trying to cool down the employment market. All right. It's 2 people for every job that is available. Okay. So that is a big issue. Okay. And so one of the reporters asked, so are you just advocating for unemployment to go up? He says, I always want people to have jobs, but just understand that this is not healthy for the economy, the way things are now with the job market and the unemployment rate. And that's what he left it at. But understand, in order for this economy to slow down, there's going to have to be some pain in the economy. Okay. Pain is going to have to be, unfortunately, the economy can't get back to normal without some pain. Without a mild recession, if not a bigger recession. Okay. So that's a little ways off, but the whole point is that's why they're raising interest rates. They're trying to cool the economy down. So, okay, how it affects your money. First and foremost, for those of you who have credit card debt, all right, it's about to become a lot more expensive for you to be carrying those balances. All right. If you have credit card debt, them raising that interest rate on yesterday. And by the way, they said it's a high chance that it's going to definitely be 50 basis points in July and maybe 75 again. So it's only going to get more expensive. Understand that. Okay. So you have credit card debt. You need to either pay it off, pay off your balance, or if you can, if your interest rate is too high, try to transfer it to a 0%. If you can't do that, you need to make some phone calls and ask them to reduce your interest rate on those credit cards. But my thing, what I would want you to do is pay the credit cards off and be done with them. This is one of the dangers of carrying a balance and having credit card debt. It's things like this. Now you're going to be paying more money back. All right. So that's that with credit cards. That's how that's affecting you. We talked a little bit about mortgages. Is going to be more expensive to have a mortgage. And you kind of, for those of you who actually want to buy a home, you had two things going on. You had low interest rates, lowest interest rates in decades, but the houses cost too much. So even if you got in there at the low interest rate, you was overpaying. You were overpaying in the long run. I've talked about this a lot of times, that you don't ask what the monthly payments are in anything. You ask, what is the total cost? That's the real question. And so many people were wanting to be like, oh man, my monthly payment is going to be lower with these interest rates. But if these interest rates go back up, my payment's going to be higher. But the house is going to cost $150,000 less than if you were trying to get it with that low interest rate. That makes more sense. Give me a higher interest rate and a house costs $150,000 to $200,000 less. I'll take that, because I'm looking at the total amount that I am paying. Because no matter what your interest rate is, you don't want, let's say you have a 2.75 interest rate on a $400,000 house. Just understand, if it goes 30 years, you're going to pay hundreds of thousands of dollars, a couple $100,000 more than that, even though you have that low interest rate. So the point is, get it down, get the houses down as far as you can in the overall price. It doesn't matter about the interest rate. I mean, of course, you don't want 10%, but my goodness, if it's 5%, that's better than it be a house being $150,000, $200,000 overvalued. Okay. All right. So credit, mortgages. All right. Student loans, private student loans. That is also going to cost you more, especially if you don't have a fixed interest rate. If you don't have a fixed interest rate on your private student loans, and even some other student loans that you have, those are going to cost you more. Not the federal student loans, the private student loans is going to cost you more. That is going to be a problem. So just like the credit cards, you need to call them and see if they'll reduce your interest rate. Those of you who are going into college, once like the student loan interest rate is about to be set, the federal student loan interest rate is about to be set, this is going to go into it. That's going to make it a little bit higher. It's still not going to be that high, but it's still going to affect it. All right. So private student loans, if you already have a little bit of issue paying those payments, please make a phone call, see if those interest rates can go down. And that's for any debt that you have. All right. Any debt that you have right now where the interest rate is variable, you need to call and see if you can get it lowered, because it is about to go up, and it will go up again in July, because they're going to keep pushing these rates up the rest of the year. Your debt is not going to get any cheaper. It's only going to get more, because they're pushing these rates up every single month until inflation gets down to 2%, and it's at 8.6% right now. They're going to keep pushing the interest rates up. Okay. So if you got debt that has variable interest rates, you better do something about it. You better pay it off, or you better get it down to where it needs to be. Okay. You have been warned. You have been warned. Don't take out debt that you don't have to take out. Don't take out debt you don't have to take out. Okay. And we'll talk a little bit more about that in a minute. Companies right now, this is how the interest rates are affecting them. And we talked already about the unemployment numbers and jobs and so forth, and it's 2 people for every job. The interest rates is about to fix that. The interest rate hike is about to fix it. So today, Spotify said they're about to slow hiring. It can be scary out there, but it's when you know, if you're ahead of it and you understand it, it makes it a little bit more manageable. Okay. Because I have not even and I told my cousin this yesterday, and she said, I need to make sure I'm looking at your lives. I said, what I just told you in this DM, I would not say on live, because that would be too much. So I try to keep it here, keep it kind of light. I know it doesn't kind of sound light, but it's lighter than it really is. Okay. So I always ask people who look at my lives to really, take action on what I'm saying, because I'm saying it for a reason. And I'm just giving it to you all in little bursts. All right. I'm not giving it to you all at once, because there's like floods of news that come every day, all day to me. And I pretty much give y'all about this much of it. I give y'all about this much of it. And like this live, like I can really go on for a long time to talk about how everything is going on, but I try to give y'all this much because I don't ever want to overwhelm people. All right. So back to companies. Companies, it's now more expensive for them to borrow money. Okay. They were running up their balance sheets in 2020, 2021 because it was low money. Like it was basically free money out there. The interest rates are low. They can borrow money, go and get the machines they need to get, hire the people they need to hire. But now the interest rates are going back up. Their stock market is in a bear market now. All these numbers are not looking good. So they are starting to pull back on everything. They're pulling back, obviously, on money they're borrowing. They're not doing that. They're actually trying to get debt off their sheet. So when I'm telling y'all to get debt out your life, or credit card debt and car loan debt, anything out of debt, when I'm telling y'all to do that, that's what these companies are doing. They're trying to lighten up their balance sheets. They're trying to get debt out of their companies because debt is a threat. That is a nice little rhyme. Debt is a threat. And so they're trying to get it off of their balance sheets. All right. So not only are they doing that, they have slowed hiring. So like I said, Spotify today announced they have slowed hiring. They're also starting to lay people off. You don't hear it as much, but it's out there. They're starting to lay people off, and unfortunately, it sounds very cruel, but like get those people their salaries, their benefits off of their payrolls. They're trying to get them off their balance sheets. Now, usually companies do this at the end of the year. I worked in that kind of industry in pharmaceuticals. Every single November, December, they would let people go because they're getting that cost off their balance sheets. This interest rate hike in the middle of the year is causing them to do that a little earlier. All right. So although you have 2 people for every job, you're starting to see people getting laid off by the thousands. Revlon today filed bankruptcy. They're about to start laying people off. You already heard about all these crypto companies firing people, but that's on a whole different thing. Tesla said they're going to slow down hiring, and he's going to lay off 15% of his salaried employees. Stitch Fix, if you ever heard of Stitch Fix, they're going to lay off 15% of their salary employees. Like they're like, people are talking about how tight this job market is and all the, no, these companies are laying people off. They're laying people off. We seen the whole tech sector about 3 weeks ago, Netflix, Twitter, everybody, Uber, laying people off left and right. It's only going to get worse because the interest rates are going up, and these companies have to start clearing some things out. What's up, G? They're going to have to start clearing some things out, and that's what they're doing. Okay. Any questions at all? Any questions or comments? And Kim, I see you over here saying, yes, it's ridiculous right now. It is definitely a little ridiculous. I can't tell what you were saying. My do fuel man card don't want to work with me at all. I don't know what you're saying with that one, but you might want to type it again. Any comments or any questions? And I want to put this out there also. This is kind of like a side note. As y'all are getting y'all questions or any comments together. When you see, because I see on a lot of pages, we've talked about pages that don't know nothing about financial literacy or money or anything. They just pick up on something, a headline, and then throw it out to their audience as bait to just jump up on and make everybody just go crazy. All right. So whenever you see the United States sending money to Ukraine, okay. And so if my cousin is watching, I'm obviously about to tell everybody what I said. I'm not going to tell them because it's too deep, but we're going to get into it anyway. Say need to get to work where the money and my student loans are in the way. Make sure you come to my student loan masterclass, June 28th through the 30th. Depending on what group you're in, you definitely need to be there. I want to talk about the economy and what steps y'all need to be taking, whether you have student loans or not, in those master classes. Like it's going to be something else on them 3 days. Before I get into the Ukraine, Kim asked the question, any tips for Airbnb owners? I don't know exactly like in which way tips, but if I was thinking about right now with travel, if you were promoting it and if you were promoting it out, I don't know if you do ads or anything like that, but promote it in a way as a staycation kind of thing. All right, a staycation kind of thing. It costs a lot for people to fly right now, especially in the United States. Like if your Airbnb was in Europe or something, you will be killing it because it's really cheap to go to Europe. But in the United States, flying to different places, I would promote it as a staycation as part of your strategy, because people can easily get there and they can just get away for, a few days locally, whether it's just like an hour and a half away, whatever it may be. And that's the way, if you're having issues getting people into the Airbnb, the staycation kind of angle could help. My Fuel Man credit card company does not want me to pay off a $1,300 balance in 3 months. They killing my biz credit. Yeah, so if that, a lot of times those credit card companies don't let you pay things off fast, and that's the downfall of it too. That's why I just don't mess with credit cards, because they know the game and they will try to screw you over any way they can, and that's just another way that they're doing it. So that's why I just don't mess with them. So back to Ukraine, and I'm just telling you all this because I just see a lot of, like I said, pages on social media talking about they got money for Ukraine, but they ain't got money for this, blah, blah, blah. Understand, like they just announced this week they're sending $1 billion over there. People just seen $1 billion and just thought it was money. We're gonna send $1 billion over there. No, they're sending $1 billion in weapons over there. So the weapons can't be turned into money for you all to be over here for whatever you need it for over here. They're weapons that's already been made and being sent over there. Okay? $1 billion in weapons. The people need weapons. That's what's going over there. That's what other countries are sending them. Weapons to fight Russia. And if you got the kind of attitude that says they need to stop worrying about them and worried about us, the reason they worried about them is because it affects us. Do you hear me? Let me run it back for you again. The reason they're worried about them is because it affects us. So yes, it's a humanitarian crisis, but they're doing it not only for that, but because of money. So with Russia invading them, it made our gas go up, and it's going to continue to be that way until that war stops. And that's why that's one reason why they're trying to do it. Another reason is that's why your food prices are going up. A lot of the world's wheat comes out of Ukraine and it can't get out. And it's gotten so bad that there are third world countries that depend on it and are entering into starvation mode. That's why all of these countries are trying to get weapons to them, and if money to them, because it affects the whole entire world. Like we're getting the small brunt of it. Europe is getting hammered because of it, because they got so much oil from Russia. And now, as far as food is concerned, in third world countries, a lot of their food was coming from Ukraine, and now things are stopped. All right. Now things are stopped. So let me answer a couple of questions. I own my house and have a low mortgage payment, but I'm thinking about getting an Airbnb insurance, which is $3,500 annually, because it would pay me if things go bad. Do you think that's a good idea? I don't have Airbnb, so I can't really coach you on that one. I will find somebody who does Airbnbs, like someone that already has one, and just talk to them about it. I don't have an Airbnb, so I don't want to tell you to get any kind of insurance or anything like that. Sorry. So I feel like I'm never going to get to Africa with Christy with all this stuff being like this. Well, I'm going next month. we're as long as it's open next year, I will be back in South Africa. So yeah, you definitely need to come. How long do I think this cool down will take? Will this recession last until the next election or longer? So there's two recessions, okay? There's a recession where the numbers are there, okay? They say, this needs to do this needs to do that, and that's a recession. All right. And then there's a recession that people feel, okay? There's a recession that people feel. Like people are feeling a recession now. The economy is not in a recession according to numbers, but there are millions of Americans who feel like they're personally in their own recession because inflation is eating their paycheck. They may not been one of the ones that were able to get their, pay increase, salary increase, hourly wage increase. They didn't benefit from that. So with prices going up, when they might have already been paycheck to paycheck, because by the way, 70% of Americans live paycheck to paycheck. They may have already been there, and now it's worse because of inflation. So a lot of people are already feeling their own recession. Okay. So some experts are saying we're going to go into one in 2023. Some are saying first quarter 2024. But like I said, that has to do with numbers. That doesn't have to do with people's personal feelings of a recession. So like I said, it's that's why I always want people to get to a point financially that they are dealing within their own economy, not the city's economy, not the state's economy, not the United States economy, the global economy, but your own personal economy, where the outside economy doesn't affect you. Okay. So yeah, so that's why I see the cool down. I would say, depending how things go, if they can get inflation down to 5 or 4% by the end of the year, things look a little bit better. But after what happened these past few days since last Friday, people are moving more towards a real recession. And unfortunately, a recession is needed to cool down the markets and cool down inflation and just cool down the economy, period. It's too hot right now. It's too hot. I remember last November, December, me getting on live and saying, and I even said it on the news. Okay. Those who are, if this is your first time, I'm on the news every 2 weeks. I said it on the news and I said, they were talking about inflation. Inflation wasn't nowhere near what it is now. They were saying, how can we, as, individuals help with inflation? And I was like, calm down. Stop buying stuff. I said it on TV. I said, we are overwhelming the system. And now the Fed has been forced to do this kind of stuff because we overwhelm the system and we won't stop. We won't stop buying things. Now we're starting to stop. Like on the weekends, I don't hardly see anybody out and about in the city. Like people are sitting down. If they ain't got to drive to work or anything, especially on Sundays, they just at home. So that's what I mean by we have been overwhelming the system and now we're paying for it. We took all that money that because the economy, and understand this, 2020, 2021, that was a fake economy. Okay. 2021, that economy was fake. You do remember all the money that was flushed into the economy when the pandemic happened. Not only stimulus checks, but you had the Paycheck Protection Program for companies. You had all these grants for companies coming in. You had what else you say? The child tax credit pushing in. All of this stuff, like all this money that companies had basically get the debt for whatever they wanted for it. 0%. All that was flooding into the market. That this economy was pretty fake for the last 2 years, and now everything's getting real. And so we just have to ride it out. Those of you who have 401ks, 403bs, Roth IRAs, we got to ride it out. And you got to ride out everything else until this inflation can come down. All right. Any questions, any other questions or comments, whether you're on Facebook, LinkedIn, Twitter, Instagram? Thank you. Any other comments or questions at all? And don't forget, guys, the link is in the bio for Instagram for the student loan masterclass, student loan forgiveness masterclass. For those of you on the other platforms outside of Instagram, the link is in the post. It is $47 right now. After the 30th, and all those good old replays go up on the site, it will be $100. All right. So right now it's 47. It will be 100. After on July 1st, it will be $100. Okay. So the first night is for all of you in the public sector. If you are a teacher, no matter where you K-12 or you work in education, higher education, my nurses, those who work in the medical field, those who work for nonprofits, social workers, any level of the government, city, state, local, federal. Let's see who else, military, anything you can think of as public sector. That first night is for you. That's June 28th. We're going to go through what your options are, what you need to be looking at and doing. And then, of course, we're going to talk about what you need to be doing to prepare for this recession that's coming. All right. So definitely that's the first night. Second night is for anybody who went to a for-profit college that closed down. You heard that Corinthian, they had 100,000 plus applications for the Corinthian. They were just like, you know what? Just forgive it all. That was $5.8 billion last week. But they're not the only ones. It's others that are there that you need to know about for student loan forgiveness. Also, for those with total and permanent disabilities, that second night is for you. And those of you in income-based repayments, income-driven repayment programs, the second night is for you. That's June 29th. And June 30th is for everybody else. All right, for everybody else. If you have federal student loans, that is your night. And so we're going to talk about the $10,000 student loan forgiveness that they are working on. I'm going to let you know from my context what is going on, what you can expect. We're going to talk about politics and how it's going to affect all of you all's federal student loans going forward, and what issues are, what dangers and risks are really out there for you all. How November can affect you all. These student loan companies that decide not to work with the federal government anymore, how that can mess y'all up when this repayment starts, what y'all need to be doing right now to get prepared for that. All 3 days are going to be jam-packed. That's what I'm going to tell you. Click the link in the bio, learn more. You'll see everything that I'm going to talk about, and it's going to be way more than that. So whenever I get on these lives with you all, like literally, I have like a few like bullet points, and I just talk from my head. The knowledge is up here. When I get into a webinar masterclass, it's like me when I do my speaking engagements. It's way more in depth, and it's strategy. It's strategy. Okay. Somebody had told me that they, at their job, they had someone come in and talk about student loan forgiveness. I was like, they gave you basic stuff that, no, I'm not doing that. I'm going to give you what you need to know about student loan forgiveness and tell you what you need to be doing strategy wise with your money. That's the difference. All right. So like I said, until June 28th, it is $47. After June 30th, after the last masterclass, July 1st, it will be $100. So it's up to you. If you got federal student loans, you need to be in one of those classes. And like I was saying, I told you companies are getting stuff off their balance sheets because they understand the threat that debt gives them. If you got federal student loans, that needs to get off your balance sheet. And if you have an opportunity right now, and those of you in the public sector, you have a very limited window. It's October 31st. So if you're in the public sector, you need to be in that masterclass. Department of Education is doing something I've never seen them do before. And they said October 31st is the deadline. And guess what? It's been going on since last October. And hardly anybody I've ever talked to in the public sector, every time I talk to someone, they be like, what are you talking about? They don't even know, because they're not really pushing it out there like that. So don't miss these master classes, okay? You can come to all three. Come to the one that your group represents, but you can come to all three, Okay. I don't care if you come to all three. And you will get the replays of all three. So anybody who buys the course, you will be able to have the replays as well. All right. Any questions or comments at all? Any questions or comments before I let you all go? Any questions or comments? And Facebook, I know that it tends to not come up until I get off. So I'll look at Facebook myself and answer any questions you all have. LinkedIn, this will get erased. Everybody else, Facebook, Instagram, YouTube, it'll stay up. All right. Any other questions or comments at all? Any other questions or comments? All right. So I'll leave you with this. I'll probably do some more lives next week. Maybe tomorrow, I don't know, but definitely next week because I want to talk about the wealth gap and so forth. But just prepare yourself. Okay. Prepare yourself financially. That's what I would tell you. Said no, great info as usual. I hope to see you in Africa. Thank you. And yep, I hope to see you in Africa too. Johannesburg. Let's get it. So yeah, definitely just get yourself together. If you feel like you're not together financially, let's get yourself together. That's what I would tell you without going too deep into it. Definitely over the next few months. All right. Over the next few months. All right. So if there's no questions or comments, I will definitely let you all go. And I'll talk to y'all soon. So